Hello ladies and gentlemen, and welcome to another video, guys. In today's video I'm going to be explaining to you the simple strategy that I used and the trade plan that helped me to pass my 100k FTMO challenge. Okay, but guys, before we get into it, please don't forget to hit the subscribe button down below for some more awesome content. Okay, so guys, now let's get straight into it. As you can see here, I've brought up the chart of Euro US dollar and the pound US dollar. Now I was trading both of these pairs at the time, and you can see my trade plan was very simple. I've written it down here for you guys: sweep, divergence, market structure shift, and fair value gap. And guys, don't worry if you don't know about any of these terms. I'm going to explain them to you very briefly in this video. But again, this was my plan and this is how I traded. Okay, so guys, just to make it a bit clear on the time frames I was looking at the hourly, the M15, so the 15-minute time frame, and the 5-minute down to the 1 minute. So M5, M4, M3, M2, M1 for execution. Okay, so again, I will explain that all in this video. So guys, as you can see here, I was looking for a sweep, and this is how my trade plan started. So I was looking for a high or low to be swept. So as you can see, guys, we have a high over here that was swept by these wicks. So I'm going to draw that out for you guys. That's very clear. See, this high was swept. Okay, and I'm going to change that into nice orange color. So again, that was swept. And again, when this is happening live, of course, you want to see a reaction in the opposite direction, which I will go into. But again, this was trade plan number one, checklist number one, ticked. So sweep was ticked. So we had a sweep of a high. Now, number two was divergence. And for anyone that doesn't know divergence, essentially divergence is when I'm comparing correlated pairs. So as you can see, I've got the chart of the Euro US dollar and I've got the pound below, and you can see that they're very similar. They are very similarly correlated and they're moving in a very similar way. So again, I was comparing these two charts. Now, divergence is when one does not do this similar thing to the other in respect to higher highs, higher lows, lower highs, and lower lows. And what do we mean by that? So say, for example, as you guys can see here, we've got a high over here in Euro US dollar, and we made a higher high over here, right? You guys can see this high is higher than this one. But on the pound, at the same time, we have a high here, as you guys can see. But over here, this did not break this high, okay? And I will show you guys a little bit, or draw a line so it helps to make it a little bit more clear. So you guys can see, got a high here, price made a higher high here. So I'm going to change it into red to show divergence. And again, same here. We got the high here, but this did not make a higher high. This in fact was lower. So now we've got divergence. And what does that tell us? It tips us off that something is happening. They're not moving as they should be, because if they're correlated, they should be moving in tandem. But if they have a divergence or they're showing divergence, then there's something happening. So again, this is another confluence in my trade plan that was ticked. So far, guys, we've got a sweep. We can see the sweep of the high, and we've got divergence. Okay, so again, don't forget, this is on the hourly time frame where I'm looking to frame my trades. Okay, now I'm going to go into the lower time frame to explain a market structure shift. Okay, so as we can see, we're going to go down to the M5. Okay, so as you can see here, guys, I'm going to move the trade plan. We can see that we know that the market moves in waves, okay? And I'm not going to go into too much detail on how it's doing this, but essentially we can see we've come up, come down, come up, come down, come up. What do we expect? We expect this pattern to continue, right? But it did not do that. We can see what happened here is that we've come up, come down, come up, come down, come up, and then this low was broken, because you guys can see how this candle has broken this low. So now we are expecting sell side, but essentially the waves to reverse in very simple terms, okay? So the market structure shift happened when this low of this bearish candle was broken. So this is where the market structure shift happens. I want to show that in blue. So you guys can clearly see this wave was broken, okay? So again, we've had a sweep on the higher time frame. Again, the higher the time frame, the more weight it has versus the lower time frames. And now we've had a market structure shift, okay? So you guys can see, now we can anticipate potentially the market to come down very simply, okay? Because again, we've broken this low and we've had a sweep on the higher time frame, and we've had divergence. All confluences to help us show, or for price to indicate to us that it's going to go in the opposite direction, okay? Very simply. So that is market structure shift tick. So we had the market structure shift here. Now, the very last thing is to have a fair value gap. Okay, now as you can see, fair value gaps are essentially the gaps between candle 1 and candle 3 in any sequence. So say for example here we've got candle 1, candle 2, candle 3. Okay, and you can see that between the low of candle 1 and the high of candle 3 we have a fair value gap right here. Okay, now as I mentioned to you guys before, I was looking between M5 and M1, and again this is on the M5, so for me to execute I'm sweeping through these time frames and looking at the fair value gaps, and I was looking at M4 in particular. Why? Well, because this is where we had a very nice fair value gap very high up, and you guys can see we have a wave down here, so we can see we've come down, come up, come down. Again, we expect price to come up before continuing the pattern down. Why? Because we've had a market structure shift and divergence and sweep. Okay, so again, we're stacking these together. We've got 3 ticks so far. So at this moment in time, I was looking at the M4 in particular, and you guys can see that there is a fair value gap here. Okay, so we have the fair value gap here. And we can see that we actually broke market structure again over here on this time frame. So you guys can see we've got a blue line here. We broke, we came down, we came up, and we came down again, breaking through. Okay, so this is what I had back then. My entry criteria, it could have been on the fair value gap, but in particular for me, I put the order at this line where this price had broken through. I had my order on this line, so you could either have had it on the gap, so for example looking to enter a short position here, okay, but I personally had it just a little bit below, so I had it on the line here. Okay, and then I covered the high, and again if we see that again with the blue arrow, come down, come up, come down, expect price to come up and continue the pattern down. Okay, right, just exactly like that. So I covered the high, which was here, so my stop loss was above the high, and this is important. This is where my take profit was. We expect price to continue down, so we expect it to at least to break this low. So this is the low here, and again this would have been my take profit, and I'm going to show that in green. Okay, so this was my take profit, and we would be looking at again around, it was a 3.1R here. In reality on the actual trade it was just under 3R, but this is what we were looking at. So again, what have we done? Just a quick run through. We've had the sweep on the 1 hour, we have the divergence on the 1 hour time frame, and now we're looking for the market structure to shift on this, and we can see that market structure shifted over here with this blue line here, because again, down, up, and now we've broken this low. Now we expect the move to reverse. Okay, and we've had a fair value gap, which is again a gap between candle 1 and candle 3. Again, I'm not going to go too deep into these topics, but this is the very simple trade plan. So I had placed the order over here, and as you guys can see, price had come up, tagged me in, and you guys can see it actually came and hit this fair value gap on the M4. And as you can see, subsequently, price came down very nicely, and of course, there in that candle there, wicked and took take profit. So again, even on here it says 3.1R, but in reality I took about 2.96R. And as you guys can see, this is the trade over here, and again this is the one I took on Euro US dollar. So like I said guys, that was a simple strategy I used. I used the hourly time frame, the M15 and the M5 down to the M1 to execute, and I had 4 simple statements in my trade checklist that I needed to tick off, and once they were all ticked, I executed, followed my trade plan and let it be, and had my take profit at the next low or the next high. Okay, because again, we don't need to, I'm personally not looking for very high R trades. Between 2 to 3R is absolutely fantastic. Any more than that is absolutely even better. But again, if we saw a sweep of a high, if we saw divergence saying, hey, something is off, and then we saw a market structure shift and move to the opposite direction, then it's a good likelihood that price is going to continue in the direction to hit at or break a certain low. And there you have it guys, that was the simple strategy I used. So again, these confluences are ones that I stacked, and this is very, very important for you to understand, is that I had the most important confluences to look for, number 1, which was sweep and divergence, and then I went on to the slightly lesser important confluences, but again still in the plan, which were of course market structure shift and fair value gap. So there you have it, guys. That was a simple strategy that I used that helped me to pass my 100k FTMO. Guys, if you want to learn more about this or these confluences in particular, I highly recommend you guys subscribe to my channel. Or guys, if you want to learn about market structure shift or fair value gap in particular, don't forget to check out ICT or Inner Circle Trader. But for now, guys, I hope you enjoyed this video. If you had any questions on the strategy, feel free to message it down in the comment section below. But for now, guys, I hope you have a fantastic day. Take care and peace.